What's up, everybody? Rell here from E&J Capital. Rell, most importantly, listen, everything we're doing is filthy, uncut, and raw. Yeah, that's it. I said it. That's just what I wanted. That's a new catchphrase. Get a good look at where we're at. This is where we go swimming in the summer times. Guys, I told you I was going to go over what an FHA is for you guys since I'm doing this real estate game. So I'm going to jump right into it. Or I can jump into the water if you guys don't like and subscribe to our channel. Don't get me upset either.
I'm upset.
I just stepped in shit. What an FHA is, it's a Federal Housing Administration. It's backed by the government. So this means that the government is providing insurance to lenders. Okay, they do this because lenders want insurance because if they give money to the borrowers, they're going to be backed by a claim if they default on the loan. 1934, they created the FHA because of the Great Depression. Okay. Great Depression, the housing was dropping about 50%. People were defaulting on the loans. So they wanted to make housing more affordable. So that this is to help stimulate the housing. Okay, so for FHA, it's for people usually that have low income and really bad credit. Doesn't necessarily mean everybody does, because FHA could be your first home buy, because typically some people do that because you get a lower down payment. So let's go over some of the requirements for an FHA. You have to have at least a 580 credit score. Now, if you want that 3.5% down payment, you're going to have a 580. So I suggest everybody get their credit to at least a 580 so you don't have to put a 10% down payment, because not everybody has liquid cash like that laying around. 2, you're going to be paying MIP and upfront MIP. Now, the upfront MIP is just your insurance policy, that you're paying for the FHA. That usually goes from the base loan. It's usually about 1.7. There's loan limits. There's housing options. Like for housing options, say you want to buy a single family, the most you can get, I think it's maybe like $200,000. You want a 2-family, it keeps going up. So if you want a 4-unit house, your loan limit is usually up to, say, $500,000, depending the area you're in and how good you can finesse the bank to give you that type of loan. I see what you're doing. You're trying to make me fall when you turn. But yeah, and then that goes into an escrow account. And then the MIP is a monthly insurance, but you're going to pay every month for, depending on the base of the loan, it could be the whole loan or for 11 years of the loan. I'll go over conventional loan. A conventional loan is for people with higher credit that have a little more income. To get pre-approved for the conventional loan, you have to have at least a 620 credit score. Also, they require either a 3% down payment or a 20% down payment. Now, if you do the lower percentage, you're going to have to be paying the MIP and all that stuff. If you do a 20% down payment, you're not going to be paying the MIP. You want me to move around real quick? Like I said, the 20% down payment, you won't be paying the MIP, but you will be paying PMI. It's a premium. Now, there is other FHA loans. You have a 203K loan. That is you're going to get the loan, and then you're going to get more money for the repairs on the house. Then you have energy efficient loan, which is to replace all, say, your old outlets and stuff like that, so you can save more money for your utility bills. So it's basically just upgrading the goddamn, I just had a fart, air appliances in your house. And then there's another loan for old people over 62 plus, where you can actually take a home line of credit out for your house to deposit in your bank. So it's basically just paying you monthly. Just do a little example. Say you want to buy a house. Say you get approved for a $200,000 house for an FHA. You're going to come up with a 3.5% down payment. I think it is, let's just say $5,000 you're going to have to come up with. So you get that. But if your credit's low, it's going to be more. So just double that. Just say maybe $12,000 you have to be putting down. Like I said, not everybody has $12,000 liquid cash. Then since you're doing the FHA, you're going to have the upfront costs, upfront MIP. That's going to go into your escrow account. So just add, say that's like a year. Say it's $6,000 a year that goes in your escrow. Then you have your monthly insurance premium that pays the FHA. So say your mortgage, buy the house, your mortgage is $100. That's just the mortgage. And then you have your FHA loan, the insurance. So maybe that adds on, let's just say $300 extra a month. So now you're up to $1,300. That's your insurance premium. Like I said, they do this so they get protected. Just in case maybe you, God forbid, you die, break your leg, get fired from work, they're going to get a claim. If you can't pay your house, you're going to get foreclosed. As simple as that. But there is an FHA loan. It's called FHA Loan Relief, where if anything that happens, they actually cover most of it. Like if you die, you're dead. You die. Someone's got to pay for it. Or you have life insurance. There's a life insurance account that will just cover it if you die. I'm not saying anybody want to die, but that's it. Now I want to talk about what I'm going through. Just the loan I'm doing. I'm doing a conventional loan, 20% down payment. So this is the weird thing. When I went to get pre-approved, I got pre-approved for the loan. I'm getting a gift of equity, okay? But it's not going to be on paper. It's like almost kind of like behind closed doors. So the house is selling. We're going to sell the house for $230,000. I'm getting the gift of equity of the 20%, which is $40,000. So technically, I'm still going to have the $40,000 gift of equity when I close on the house. The house is actually going for $190,000. But since I'm getting the gift of equity, they have to price the house at $232,000 behind closed doors. So it's kind of like, in a way, it kind of seems dirty, to me, because it's not due on paper. It's just between me, the banker. Between me and my loan officer, I'm getting that gift. Now, I want everybody to understand, FHA versus conventional, it all depends your situation on what you want to do. I say if you want to jump into real estate and you're going to use an FHA loan for your first house, get maybe like a multifamily or or a triplex or something like that. Before I get into that, FHA has rules, by the way. You have to live in that residency for over a year. Then you can decide to rent it out if you choose to. But that's what I want to get into. If you decide to buy a multifamily or any of that, you can live in one of the residency over a year, and you could rent it out to 3 other people. So say my douchebag of a cameraman, I buy a house, he wants to live in it, and I have another douchebag friend that wants to come into it. All right, cool. They're basically paying your mortgage right then and there. So you can save up your income, stack it away for a couple of years, and then maybe you can decide to get into a conventional loan. Or you want to do a conventional loan first and then do an FHA, because when you get a conventional loan, there's no rules over there. It's not government backed, so you could actually rent it out after you fix it up. But then you could go for an FHA and have that be your primary residence. Okay, so that's just a little quick tips on what an FHA is. Define your situation, what you want to go for. There's other different types of loans out there. You afford a traditional loan. That's what it comes down to. If you don't, FHA is your best. Like I said, the FHA is just made for people with low income, bad credit, and people that can't afford a traditional mortgage. But like I said, it doesn't necessarily mean you have to do that. You could have a lot of money, but you could just have a cheaper down payment. But in the end, you're going to be paying more on an FHA than you do a conventional loan. So keep that in mind. Guys, get a good look at my city. It's 50-something degrees out. I just killed a chicken. Make sure you guys like and subscribe to our YouTube channel. We're doing our own videos. I'm doing the real estate right now. The cameraman's doing stocks. So always make sure you're checking out what he's dropping, because you will learn something. If you don't, I don't know how much more easy he can explain it to you guys. So make sure you guys check out the videos, subscribe. Just get us to that 1,000 sub. We appreciate all you do. I love y'all. Rell out.